Talk about commodities now, where we have seen choppiness continue in the day-to-day as well. There is safe haven buying coming in for the precious metal prices as the US Fed still is talking about those budgets, and markets are expecting, or rather fearing, a government shutdown starting tomorrow. In the meanwhile, that impact really can be seen in case of the industrial commodities, because that is where the decline has come in. The crude prices have declined for a fourth straight week. You are looking at nearly 1.5% of decline coming in for them. The base metal prices, of course, has seen a bit of a buying coming in ahead of the Chinese holidays that would start in this week. Let's get in then. Biren Vakil, he's commodity consultant, Paradigm Commodities, and he joins us live in Ahmedabad. Biren, hi, welcome. What's your sense, first of all, coming in case of the precious metal space? Because while there is some safe haven buying coming in, do you see it stretching further on the higher side?
I think most likely today's outcome would be happy, and we may avoid government shutdown. But if it becomes outlier and if we see really shutdown, then gold may post a spike, a brief spike. So I would prefer to go short in December gold around 30,800. Stop loss would be around 31,000. Downside objective would be 13,100.
Biren, also, what's your sense coming in for energy space now? Because the decline has been much sharper into that space, from 109 to 101 in case of NYMEX. And the Indian prices, of course, have come off all the way from 7,700 to 6,400 right now.
We have seen a fairly steep correction from the up move. At this level, I am reluctant to go short in crude oil because of ongoing geopolitical risk in Asia. But I think still gas is a good sell story because of high carry, very high carry. I prefer to short gas if around 228, 230 with the wider stop of 240 and downside of say 205, 210. This is of course a positional call.
Biren, how would you be looking at the base metal space? Because while there are threats coming in from US right now and there is uncertainty, do you think the markets have factored in? And also, how would you want to trade ahead of the Chinese national holidays?
The market would be shallow, and sometime in the absence of Chinese market, we may see counter trend movements in shallow markets. Basically, I see a deleveraging kind of process here. Deleveraging from real market is spreading into financial markets. The traders' apathy, I would say. I'm seeing a drop in volumes. But one particular metal attracts my attention, that is lead, where carry cost is now too much. So I prefer to go short in lead around 134. Stop loss would be 136 and target would be 130, 128.
Let's talk about some agro commodities then, Biren. And what's your sense coming in for the cotton prices now? Because as per the latest estimates of sowing that have come in, the cotton sowing, of course, has been much higher than the previous year. Would you look at another straight year of record production coming in yet again for India?
Yeah, I think we may top 4 crore bales because recent rains in West Rajasthan, Gujarat, MP and Maharashtra is by and large beneficial. It may affect first picking, but later on picking would be definitely, we may say, good yield. So I am expecting near-term tightness, but I would go short in cotton December contract, 20,700. Stop here would be 2950 and downside objective 2200, 300.
Let's get in then. Hitesh Jain from IIFL, and he joins us on the show with his strategies. Hitesh, hi, welcome. Let's start with crude prices first, and the kind of decline that we have seen, $101 back in case of NYMEX. How would you be trading that in the Indian markets?
See, Manisha, during the past 24 months, energy markets have been predominantly driven by the developments in the Middle East. And with the Syria issue relegated to the back burner, and there's been moderating rift between Iran and US. In fact, both the countries have trying to break the ice. And such kind of diplomatic measures have never been initiated between the two countries, where the President of the Islamic Republic and Obama had a direct telephonic interaction. So we are clearly seeing the risk premium being diluted, and we have seen the WTI prices breaching $102 per barrel. So the broader trajectory definitely looks towards on the downside, and we do not rule out a downside till $99. Talking about MCX, I think we can look on the broader perspective and look at a target of 6350, 6300 as well. But on the intraday perspective, I think I do not rule out a downside till 6370.
Hitesh, also, how would you be looking at the natural gas prices? Because while we've seen this quarter come in as positive for this space, but the lower coal prices, also high inventories, moderating weather in US, would you say that all of this would continue to put pressure?
Yeah, that would definitely weigh. And as far as technicals are concerned, during the past few trading sessions, we are a bit disappointed by natural gas prices. All the prices did really well during the past few weeks, where they were actually trying to sustain around 3.6, 3.7 on the NYMEX. But off late, there's been some kind of a breakdown as far as MCX is concerned. 225 was crucial, has been a crucial support. But they did close below this level during last week. And they, again, I think these levels will be taken away. So overall, I think there will be some weakness could be extended, and we can go as low as 210 or 215 in the coming days. For today, if we talk about trading strategy, I think I would prefer to sell a bit on the higher side, that is at 227. And we're looking at a target of 221.
We are expecting gold prices to move up and touch levels of around 31,200 rupees in next couple of days. So anytime dips in prices till 30,400 rupees or 30,500 rupees in MCX should be used as buying opportunity, with a stop loss to be placed at 30,200 rupees on lower side for the initial target of 30,900 rupees. And if price is able to break and give close above 30,900, then further upside rally can be seen till 31,200 rupees in next couple of days. We are expecting silver prices to move up and touch levels of around 50,500 rupees in next couple of days. So anytime dips in prices till 48,800 or 48,900 rupees in MCX should be used as buying opportunity, with a stop loss to be placed at 48,200 rupees on lower side for the initial target of 49,900 rupees. And if price is able to break and give close above 49,900, then further upside rally can be seen till 50,500 rupees in next couple of days. At present, crude looks oversold on charts. So there should be some pullback rally in crude, in which crude can move up till 6520 rupees. So anytime dips in prices till 6420 rupees in MCX should be used as buying opportunity, with a stop loss to be placed at 6370 rupees on lower side for the initial target of 6480 rupees. And if price is able to break and give close above 6480, then further upside rally can be seen till 6520 rupees in next couple of days.